Ladies and gentlemen, thank you for joining us today for this earnings call to discuss our results for the first quarter ended 30th June 2018, which we announced yesterday. Present with me on the call today are Gopal, Raghu, Jaideep, Badal and Komal. Let's start with the top themes in India's telecom industry during the quarter. With the exit of all marginal operators and the merger approval of two leading players, the industry has decisively moved towards a 3+1 market structure where SIM consolidation is inevitable, and this is good news for us. Despite the short-term pain, we continue to believe in the long-term secular opportunity of the Indian market, a market of 1.3 billion consumers with less than two-thirds of unique mobile penetration and in even lower data penetration. Indians are spending more and more time on their phones, from about 3 hours last year, and average Indian today spends more than 4 hours on their phone daily. And this just points to the demand being very robust for times to come. In such a mobile-only market with rising affordability and falling prices of phones globally, the feature phone market will remain a limited segment, and smartphones will become the predominant gateway to Internet for consumers across age groups. Each year, over 120 million smartphones are added to the network, and given our leadership position, we feel we are very well poised to be the natural beneficiary of the upgrade cycle. On our own network, between Q1 of last year and Q1 of this year, we have added over 50 million 4G devices, with a very large portion of these users using Airtel as a primary 4G SIM. And hence, we are confident that we will decisively be able to win the 4G game. To this end, our devices platform, which is a partnership-led model with OEMs like Apple, Samsung, and Nokia, and players in the digital lending space, we have created an ecosystem of lenders, logistics companies, and distributors to offer aspirational handsets at an affordable price at customers' doorstep. Our other programs like Mera Pehla Smartphone and Jump, Just Upgrade My Phone, are running successfully to enable millions of Indians to upgrade their devices. Similarly, being India's only integrated operator, our franchise offers a unique play of convergence across multiple screens of homes and businesses, and this remains our strategic advantage. Besides the 345 million consumers we serve on mobile, we are a strong enterprise and homes franchise. Talking about enterprise, we are the preferred partner of choice to over 50,000 business customers, including leading global telcos, large global multinationals, OTT players, software companies, with strong relationships built over the last 20 years. We already run a very successful program in India with Airtel for our global clients, which has seen phenomenal results. We rolled out a first-of-its-kind carrier digital platform for wholesale voice, which offers paperless sign-up, quick voice interconnect, and real-time traffic analytics for global carriers across the world. Our domestic business continues to benefit from our strong synergies with mobile and our uniquely positioned fiber assets, and which we continue to grow faster than the market. We are also driving newer growth areas such as data centers, IoT, and security. On the security front, we run a very successful partnership with Symantec, which allows us to offer security solutions alongside the infra layer. We are expanding our fixed broadband network deeper and wider to offer speeds up to 300 Mbps using technologies such as FTTH and vectorization. Plans now also come with bundled content like Amazon Prime memberships, plus subscription-free access to Airtel TV and Wynk Music. To enhance customer experience by bundling their various relationships with Airtel as one, we also recently launched One Home, One Bill, which enables a single bill across postpaid, fixed broadband, and DTH, and discounts therein. We are also very pleased to say that the Airtel Payments Bank has received requisite approvals from RBI to start onboarding new customers. Airtel Payments Bank has also been permitted by the UIDAI to resume the onboarding of customers using Aadhaar eKYC. Another milestone achieved during this quarter has been on Airtel TV, which crossed 50 million download mark on the Android store, underlining its growth popularity among smartphone users as the go-to destination for digital content. To cater to this exponential data growth, investments necessitate an increase in pricing, and we continue to believe that mobile tariffs need to move up. This, along with the natural upgrade cycle to smartphones and data, will render strong industry revenue and profitability growth going forward. Now let me turn to our Africa operations. Africa saw a stabilization in prices of crude and commodities, which led to a rebound in growth and fundamentals of the economies. Despite Q1 being a seasonally weak quarter, Airtel Africa witnessed steady improvement across top and bottom lines on the back of twin engines of data and mobile money, underpinned by strict cost controls. On a constant currency basis, gross revenue grew 13.9% year-on-year, net revenue grew 16.6% year-on-year, and EBITDA grew 44.8% year-on-year, with EBITDA margins at 36.4% as a new high. Starting this quarter, borrowings for the acquisition of Africa operations and its associated finance costs have been now included in the Africa segment and have been reclassed from the India SA segment. And we are very pleased that despite the additional servicing of acquisition interest, Africa is PAT positive. Let me now talk about the Africa operations in some more detail. Africa has seen strong revenue growth outperforming markets and competition. Airtel has for the last quarter seen a constant currency CAGR growth of 7.2%, which not only exceeds the market but also the key competitors. In our top 5 markets, we are on average growing between 10 to 12% of revenue, and this positions us very well for a strong overall growth across the continent. Our growth has been premised around 3 main pillars. Enhancing distribution. We created a very strong direct distribution model to serve the under-penetrated markets of the countries which we operate in, with special focus on ensuring strong presence of activation outlets, which not only ensures quality of acquisition but also KYC compliance. As on date, across our 14 countries, we have close to 1.25 million retail points of presence and nearly 200,000 activating outlets. Number 2 is networks. We undertook a massive network modernization program and upgraded networks from conventional 3G to U900 in 11 countries and have launched 4G in 9 countries, with the balance being underway. By investing in future-ready single RAN architecture, we were able to improve site throughputs to cater to the fast-growing data demand. Over the last 8 quarters, our 3G site counts have increased by 23%, while our LTE site count has, of course, exponentially grown. Equally, we have invested in transmission and backhaul, and given our unique presence, we are the only operator with coast-to-coast fiber capability. This has meant that our data revenues have grown very strongly at 35% year-on-year, and today contribute over 21% of our revenues. Thirdly, Airtel Money. Average banking penetration in Africa being below 25%, we have been able to leverage our product and distribution architecture to grow mobile money across. As of the first quarter, our annualized throughput is over $24 billion, and Airtel Money now contributes over 5% of our overall revenues, clocking 47% year-on-year growth. Number 4 is around cost. Zero-based cost rebasing is a very critical part of our strategy, and we have ensured that constant currency OPEX has always stayed constant or reduced quarter-on-quarter, leading to margin expansion. We have grown margins every single quarter for the last 8 quarters and have closed this quarter at 36.4%. We are now the leading operator in most of our markets with number 1 or number 2 position across. With average telecom penetration of 41% and a smartphone penetration of 27%, we remain very excited about the overall opportunity that the continent presents. Equally, we are confident that investments are ahead of the curve, be it in distribution, networks, IT, brand of people, which will keep us well positioned for the future. Coming to M&A activities for the quarter, Telenor acquisition was complete on 14th of May 2018, having received all statutory and regulatory approvals. The transaction will add 43.4 million megahertz of paired spectrum in the 1800 band across 7 circles, besides bolstering our customer base and leadership position. We have consolidated the financials of Telenor India from the said date. Regarding Tata, we are currently seeking approvals from NCLT, following which we will approach DOT. And finally, on the Indus Infratel merger, both CCI and SEBI approvals have been received, and as a company will file its first motion before NCLT. Moving on to our financials, consolidated revenues came in at INR 200.8 billion, which is a quarter-on-quarter growth of 2.3%. While revenue growth was aided by growth in Africa, Mobile India saw a growth of 1.2% as well sequentially. This was aided by the addition of Telenor's business, but on an underlying basis, we are seeing some degree of stabilization led by our strong net adds, including data. Africa constant revenues at $794 million grew 1.7% sequentially and 13.9% on a year-on-year basis. Consolidated EBITDA at INR 68.3 billion is down 2.8% quarter-on-quarter and 12.6% year-on-year, led mainly due to OPEX headwinds on account of higher network costs, as we aggressively roll out networks in India. Africa organic EBITDA in constant currency at USD 289 million is up 3% sequentially and 44.5% year-on-year. We remain focused on structural cost containment through our War on Waste program. Depreciation and amortization expenses were at rupees 51.4 billion, an increase of rupees 2.4 billion due to additional capex. Net finance costs for the quarter were at rupees 21.2 billion due to higher interest costs and forex losses this quarter. The company recognized an exceptional gain during the quarter, largely on account of creation of a deferred tax asset in Nigeria, partially offset by charges towards network refarming, upgradation program, and integration-related costs pertaining to business combinations consummated during the quarter. Net income post-exceptional items came in at rupees 973 million. Capex at rupees 82.1 billion is slightly front-loaded, even as we continue to maintain our overall guidance of approximately rupees 270 billion for the full year. To enable our spend, strengthening our balance sheet and focus on debt reduction remain key priorities. Net debt during the quarter was rupees 1029 billion, which increased partly due to the Telenor-related deferred payment liabilities onboarding and other liabilities assumed by us. Additional debt undertaken for funding the OFCF shortfall given the higher capex this quarter, and of course the adverse forex causing a translation impact. Net debt at EBITDA is at 3.61, and we continue to look at various opportunities inorganically to further strengthen the balance sheet. To sum up, while pricing softness continues, India's telecom industry has consolidated and witnessing a huge expansion in data and voice usage with the move towards bundled offerings. With our scale and efficiency, backed by a superior spectrum and network footprint, we continue to hold and drive market share leadership. Finally, our focus on strengthening our distribution model and enhancing consumer experience in Africa is leading to profitable top-line growth. With this, I'll hand you over to the moderator.
Thank you very much, sir. We will now begin the question and answer interactive session for all the participants who are connected to the audio conference service from Airtel. Due to time constraints, we would request if you could limit the number of questions to 2 to enable more participation. Hence, management will take only 2 questions per participant to ensure maximum participation. Participants who wish to ask questions may please press star 1 on their touchtone enabled telephone keypad. On pressing star 1, participants will get a chance to present their questions on a first-in-line basis. To ask a question, participants may please press star 1 now. The first question comes from Mr. Sachin Salgaonkar from Bank of America, Mumbai. Mr. Salgaonkar, you may ask your question now.
Hi, thank you for the opportunity. First question is on CapEx. And Nilanjan, your comment taken that, it appears to be front-end loaded. But any upside risk you see to the overall CapEx number for this year? And it would be great to understand where the CapEx went in this quarter, because we didn't see a equivalent jump in your 4G BTS or fiber kilometer rollout. And second question is to Gopal. This is, more on a feature phone perspective. Clearly, Jio has 25 million feature phones, and they are gaining customers. And given the fact that you guys are in a leadership position, I presume a bit of your customers also moving out there. And as you know, they are looking to target 100 million customers going forward. So the question out here is, which is a sub-segment which is going perhaps in the direction of these feature phones? Are these the current feature phone guys, or there is a bit of a downgrade from the smartphones? And how do you actually look to, respond to this? Because till date, we are not seeing any response coming from you guys.
Okay. Hi, Sachin, Badal here. First of all, we think we'll be absolutely in line with the overall capex guidance given earlier for the current financial year. Yes, we have issued several, we have front-ending of capex for which we have procured material, and most of the material is under progress. So you should see the capitalization in the forthcoming quarters, starting from second quarter.
Sachin, to your second question, the new feature phone is largely taking some share away from existing feature phone users and less a downgrade from smartphones. I think for us, the single biggest priority for us is to really get the right quality of customer. So our focus is really to win in the 4G space on smartphones, like I mentioned last quarter, to really get the primary SIM slot and really drive share of primary SIM slot. And the second part is in the feature phone side, to try and ring fence and hold on to our higher ARPU customers, and those are the two really key strategies that we are sort of driving.
Thanks, Gopal. A quick follow-up out here. When we look at the monthly broadband subscriber additions, clearly the gap appears to be huge between Jio and Bharti, and one could understand, the Jio numbers are getting masked by feature phone numbers. But, how do you look at it? Do you see this gap narrowing down, Airtel, given your push program, seeing incremental increase in the overall net adds going forward?
So I think we have done close to about 10 million broadband net adds this quarter. Part of it is also on account of some loss that we saw on the Telenor side as those customers got integrated in the first half of the quarter. So by and large on smartphones, we're getting more than our fair share of broadband net adds. Where we are obviously not competing is on the feature phone side, because on the feature phone side, we don't, those are not broadband net adds, those are generally just voice net adds.
Got it. Thanks.
Thank you very much, Mr. Salgaonkar. The next question comes from Mr. Kunal Vora from BNP Paribas, Mumbai. Mr. Vora, you may ask your question now.
Yeah, thanks for the opportunity. I have two questions, one on the mobile and another one on FTTH. First is on mobile. If I take a slightly longer term view, 2-3 year view, where do you see the tariffs stabilizing? Today we have 150 plans and 200 plans. Where do you see, say on the lower end 50 rupee plans, 70 rupee plans coming in? So where do you see the tariff stabilizing? Do you think it can be much higher? Where do you see in 2 years' time it's stabilizing? That's one. And also, would you look to charge for content, or content will always remain a part of the bundle? That's on the mobile side. And coming to broadband, wanted to hear your thoughts on what do you see as the potential side of the market? You've been stable at 2 million while Jio is talking about 50 to 100 million potential market size. Do you share that that vision that you have that kind of potential, and would you look to accelerate investment on the FTTH side? That's it. Thank you.
So I think firstly on the pricing front, clearly, we are in an unsustainable level of pricing today. Not so long ago, our ARPU used to be about close to 200 rupees. So we've lost a very significant amount of ARPU, and if we were to go back to the same level of ARPU, then clearly our business would be double of where it is today. I think that, this is, at this point in time, there's obviously a very competitive context. My own sense is that pricing should start lifting in the next perhaps 6 months. So hopefully we'll start seeing some pricing movement. But this is obviously a function of competitive dynamic. On the content side, for now we've announced that till December we will give this content free with the bundle. One of the advantages of doing that is that our churn comes down when people pick the content along with the bundle. On broadband, I think, the larger point you're making is right, which is India is a very, very underserved market on broadband. There clearly is a big opportunity to expand home broadband. What that number is, can be debated. But for us, last couple of years, we've been rolling out about 500,000 to 600,000 home passes. This year, our plan is to step it up to close to 2 million. We have begun this quarter in a slightly slower wicket because that's the way it takes time to ramp up getting clearances and permissions and all. So you'll see a step up in our broadband, home broadband investment during the course of this year.
Yeah. On the fixed broadband, number has been stable at 2 million. Even now, the plans which you're talking about, are not really very aggressive plans. It's about modest improvement. Do you see an exponential growth possibility in this segment, or do you think it's ROI is not there in the business?
No, I think that this is a business that, unlike mobile, it's not a business based on a cloud that you provide across the country and then the millions of customers that you can acquire. This is a home by home, street by street, office by office type of business. Typically what you find is, if you look at our history over the last decade, you will find utilizations of anywhere between 40 and 45, maybe 48%. It takes some time to actually get, utilization going, simply because you're going into new buildings, into new homes. Some of those may not be occupied. Then, gradually the occupation begins to come in. So you see this sort of playing out over a period of time. And our focus right now is to really go into more of high-rises and in very, very important cities where we believe there's a lot of affluence, then even on a selective basis, even going into flat-bed geographies.
Understood. That's it from my side. Thanks, Gopal.
Thank you very much, Mr. Wood. The next question comes from Mr. Manish Adukia from Goldman Sachs, Mumbai. Mr. Adukia, you may ask your question now.
Yes, hi, good afternoon, and thank you for taking my questions. I have two questions. First one is just a follow-up to the comment that you made in the earlier question. You mentioned that, of course, depending on competitive intensity, pricing could potentially go up in the next 6 months. I wanted to check, in your opinion, what would need to change for the industry over the next 6 months for pricing to actually go up? That's question one. Question number two is on your net debt to EBITDA, which is about 3.7 times as of last quarter. While we understand that you said you could sell some of the non-core assets, etc., but they all look like they'll be sometime in 2019. Given your elevated capex right now, is there anything you're exploring for more immediate term deleveraging, or are you comfortable with your balance sheet at this point in time? Thank you.
Okay, I'll take the second one before Gopal reverts on the pricing issue. On net debt EBITDA, like I said, it's up from about 3.25 to about 3.6. Part of the reason is because we had operational FCF shortfall due to the capex in this quarter, which was higher. Part of it was Forex, part of it was Telenor. So while 3.6 is not unduly alarming in this sector, of course, we, being conservative, always are looking at inorganic opportunities. Hopefully we will get DTH approved this quarter. Strategically, of course, you know about Indus Infratel. Hopefully that's moving faster. And in that case, we look at other opportunities as time comes, but nothing which unduly concerns us immediately. We continue to explore opportunities for inorganic monetization.
I think to your first question, yesterday you would have seen that the approvals for the merger of Vodafone Idea have come through. I've said this before, that India is rapidly moving towards, equal size, more or less equal size, three-player market. And that is, I think, something that is now on the cards. And I believe that, current levels of pricing, like I've mentioned, are untenable. And so pricing should start lifting in some time. I'm not a soothsayer to say exactly when, but I think that this is currently an unsustainable situation, and therefore it should start moving in the context of a strong, three more or less strong equal-sized players in the marketplace.
Sure. If I can just follow up on the response around net debt to EBITDA. So in terms of your capex, what percentage of your 4G rollout is already done? So you said that, of course, in the quarter, the capex was front-loaded. But going forward, starting FY20, for example, should we start seeing a decline in capex intensity in your view?
Yeah, overall capex should go down. But, of course, like I said, we will not, starve the business if anything demands additional capex, whether to compete in different areas. But, like I said, most of our capex today is on the FD coverage layer. And we put the TD coverage wherever capacity is demanded. So I think in that sense, we are not starving the business, and that's the correct way to handle it.
Let me supplement what Nilanjan is saying. I think our focus is to make sure that we, deliver a really solid experience on the network side with customers. We're obsessed about that. What are we doing out there? Obviously the rapid deployment that we've done in the recent past over the last 12 to 15 months is really to create the capacities in order to deliver that experience. Our FD footprint is more or less complete across the country. Our TDD footprint, which is a 2300 footprint, would be complete in about maybe 50-60% of the country. And we are also looking at refarming some of our 900 megahertz to actually take it into 4G over the course of the next 6 to 12 months, which should give us, again, increased capacity and better spectral utilization of the same spectrum that we're holding, expensive spectrum that we're holding. So I would say that a lot of the radio capex is now already underway. We've put in a lot more investments on fiber and transmission and getting our networks ready. We are, from here on, I think we are going to be very smart about where we deploy capex and how we think about capex. So to that extent, wherever it's required, we will do it. Our focus would be to continue to deliver a really strong customer experience.
Sure, that's very helpful. Thank you and all the best.
Thank you very much, Mr. Adukia. The next question comes from Mr. Srinivas Rao from Deutsche Bank, Singapore. Mr. Rao, you may ask your question now.
Yeah, hi. This is Srini here. I have two questions. First, could you throw some light on the Telenor impact for the quarter? Or let me ask in a slightly longer term, from the time you acquired or you talked about acquiring Telenor to finally when you got it, what kind of subscriber additions finally you saw from that franchise? Secondly, on the same note, we have mentioned that your ARPU would have been 109, excluding the impact of Telenor's base addition. If I just do a broad math, and again, I don't know the full information, but it looks like your organic additions would have been quite less for the quarter. So if you can clarify on that count, that will be helpful. Thirdly, just wanted your view on the whole content space. Do you see the ability to monetize content on a sustainable basis in India on mobile? Is that possible? I ask that in the context of, for example, iconic content like cricket, which Hotstar has got it, and while they are, trying to monetize on the mobile space, a large part still is ad funded effectively. So, how do you see, content getting monetized in India going forward on the mobile side? These are three of my questions. I'll come back for more if I have time. Thank you.
So on the Telenor front, I think first and foremost, the integration that we've had has been a very, very solid exercise. It's been seamless, and I think our teams have done a really solid job on all fronts. Integrating the networks, shutting off the sites that we did not need, leveraging their core, and really migrating all of those customers onto Airtel at the same tariffs that Telenor was providing. So I think that's been a job really well done. I think from a Telenor impact perspective, about 28 million customers are the ones that we have now acquired. The revenue from Telenor is in the ballpark of about 150 odd crores that we got this quarter. And we believe that in addition to all of this, we have got spectrum in 6 circles from Telenor in the 1800 band, which is priceless spectrum. It will actually be moved into providing a second carrier, or in some cases a third carrier of FDLT, which will dramatically raise our capacities at marginal cost because we don't need to invest in radios. So I think that's really the sum and substance of Telenor. On the content side, like I said, I think we are currently providing content now free till December, and we believe monetizing this content is a challenge in this market. So we are going to be very, very smart and careful about the sort of content investments we make. We are not going around making large content bets and investments. We will prefer to actually ally and use alliances to drive our content offers with the customers. You've seen what we've done on our postpaid side through a combination of two things. One is leveraging the family or the add-on coupled with providing content like Amazon to high-end customers and even perhaps Netflix to super high-value customers. We will use all of these relationships as well to actually play in the content space while we continue to drive Airtel TV with content from linear television and a bunch of other webisodes and so on, which have actually been which are available on the platform.
Thanks. This is helpful. Just one question. Is there been any network cost impact of Telenor, or that's largely not there? Your network cost has gone up a bit, but it's not materially high in the context of last
material. It's not material.
Okay, thanks. Thank you.
Thank you very much, Mr. Rao. The next question comes from Mr. Ravi Menon from Elara Securities, Mumbai. Mr. Menon, you may ask your question now.
Hi, thank you for the opportunity. If you look at the subscriber numbers for broadband alone from Tri, it looks like you had 91.6 million broadband subs in May, and that's come off a little bit. And from your earlier comments, it seems that you had about 10 million ads, which would have taken you to So that implies about 7 to 8 million broadband subscribers that you've lost in Telenor. Is that right? And, why would this loss occur at all?
Ravi, when we look at our numbers, there's a slight disconnect, but overall we have actually 94.7, 94.8 million data customers, and we have added close to 9 odd million customers in the last quarter. Overall, from a Telenor, as Gopal mentioned earlier, we have net added 28 million customers. The overall number was approximately 31. We have lost 3.5 million customers purely on account of dual SIMing or any other reason, but we haven't really lost too many customers as part of the overall integration with Telenor.
Right. That 94.7 is overall data customer base, right? I'm looking at just the 3G and 4G, which I think is what TRI also provides.
Right.
So that shows a month-on-month decline. So I was just wondering why that would be.
So even 3G, 4G customers is around 85.7 versus 76.5. We have added close to 9 million customers in 3G, 4G as well. So maybe we can take this offline, Ravi, and we can clarify on the numbers. But net, we have had a substantial and super additions as far as data customer is concerned in the last quarter.
All right. And also wanted to get your thoughts on, what do you think is kind of the replacement cycle that's going on in smartphones? On your subscriber base, you would have seen that. Do you think that people are upgrading every 2.5, 3 years, or, is it shorter than that? And is there any change to that you've seen over the last 1 year or so?
It's about 22 months, so anywhere between 20 and 22 months.
All right, great. Thank you.
Thank you very much, Mr. Menon. The next question comes from Mr. Rajiv Sharma from HSBC Mumbai. Mr. Sharma, you may ask your question now.
Yeah, thanks for the opportunity. Just got a few questions. First question is for Gopal regarding, the progress on VoLTE has been slower than expected. So what are the challenges you are facing, and by when we could see pan-India VoLTE rollout? Second is, if you can help me understand the capex this year, how much of this is going into fiber, radio, and how much you plan for home broadband and increasing home pass. Third is, is it on your radar even to look at the, listed or not listed cable TV players to offer both fiber and offer both home broadband and TV at some point of time to, compete better with Jio in the FTTH space? And lastly, your cash burn for the year is around, 10,000, 12,000 crores. And if we take the spectrum liability payments next year, this would be 15,000 crores. So how do you see this? Is it a temp situation? Could we see some equity dilution? Some color on this.
Okay, I'll take the last one. In terms of ability to finance, and I think we've got some work questions. I think in that sense, we have enough lines lined up for our refinancing for any short-term debt, bonds which are coming up in December, and of course the usual rollovers which we'll have for bank loans and the CP which we run. So from a liquidity position, I don't think we are very concerned. Like I said before, we will always look at inorganic opportunities wherever they are, when that's required. So we're not unduly concerned about that.
Rajiv, on the capex side, as Gopal mentioned earlier, our FD coverage is by and large over. There are certain additional sites which we have to put, which we'll put in the coming 2 or 3 quarters. Our focus will be to expand our TD footprint and densify our network, and also significantly enhance our transmission capacity. That would be primarily on the mobile side. On the broadband specific home broadband, we have substantial plans for the current year of at least 2 to 2.5 million home passes to be rolled out in the current year. And also we will be looking at replacing in the marquee areas wherever we are in copper right now to convert that into fiber. That could be another 1 million, 1.5 million home passes. All of it is planned in the next 4 to 5 quarters.
And to your last question on VoLTE, I think we have rolled out VoLTE in most circles now. There are just a couple of circles left. I think the challenges on VoLTE are 2 or 3. One is that you have to, those devices that are there need to have the VoLTE standards of Airtel. Most of the new devices now coming in do. In some cases, some of the older devices needed software patches through the latest over-the-air upgrades. That's also been sort of worked out with the device manufacturers, and some of them are happening as we speak. The second part of the funnel in terms of drop-off is then optimization of our networks, making sure that we tune it well. When it comes to VoLTE, what you find is that the what you call the link budget, which is the propagation of VoLTE, tends to be slightly lower than non-VoLTE, and therefore a lot of network tuning needs to be done. That said, I think we have made a significant progress. In fact, one of the key cities that we picked up as a pilot to really drive VoLTE much harder. We've been very encouraged. We are carrying almost 25% of the smartphone traffic now on VoLTE in that city, and we're going to use that knowledge to actually take it across the country and really drive VoLTE very hard in the next 6 months.
Yeah, just one question which I asked on the cable. Any inorganic approach towards the cable space, and just a follow up that on your feature phone you said that is it correct to assume that you are okay losing some low end subscribers if that's the case, maybe because you see that only as voice?
I think on the cable part, it's a bit speculative for me to answer that question. I think there are several challenges there in terms of the quality of the network, the permissions on the last mile fiber, and so on and so forth. Yes, I think to your last point, I think we would be delighted with a better quality of customer base, and if we have to shed some customers at the low end, we'd be happy to shed those customers. We'd be much happier to drive better quality of customer base. I think that's absolutely accurate.
Thank you so very much.
Thank you very much, Mr. Sharma. The next question comes from Mr. Naveen Kulkarni from Phillip Capital, Mumbai. Mr. Kulkarni, you may ask your question now.
Yeah, hi. Thanks for taking my questions. My question is on the per subscriber data utilization. So this quarter, the average utilization was around 7.9 GB per subscriber, and probably the exit utilization might be higher than that number. So do you think that we are reaching pretty close to the peak levels of utilization per subscriber? If I were to also look at the minutes per subscriber, they are also close to 700 minutes per subscriber per month. So more or less, do you think that we are very, very close to the peak levels, or is there further scope for this to go up? So your thoughts, please, on this?
I would, if you look at the last 3 quarters, in every single quarter, we've added about 1.3 GB per month in terms of customer usage. So, 4 in quarter 2 went to 5.3, which is 1.3 GB. 5.3 went to 6.5, or close to 6.6. And 6.6 is now looking like 7.9. So it's been a 1.3 GB addition that we've seen every quarter. I think there will be obviously a point at which it will not rise further. I don't think we're quite close to that. I mean, I think we're getting close to that point, but we're not quite there. So you'll still see some increase in data usage per customer. And this is primarily because of the very large allowances that are being given at incredibly low prices. I mean, nowhere in the world do you have, for 130 to 140 rupees, almost 40 gigabytes of data a month with unlimited calling. I mean, it's absolutely a staggering amount of data allowances, and that's why people are kind of moving up. In a way, this bodes well, because as customers tend to get stickier in terms of the time they spend on the device, and as like Nilanjan explained, from an average of 3 hours, they're now spending close to 4 hours on their device. This should hopefully translate to solid ARPUs as pricing begins to lift. On the voice front, I would say we are getting close to a point where this should not see, beyond a point, too much of increase. But we have obviously been surprised by the amount that, people in India love to talk.
Okay. My question was in the context of if I were to look at Jio's per subscriber utilization, that is at around 9.7 GB per month, that is more or less kind of stable. So do you think it has implications on future CAPEX and future build-out of network for us?
I think the future build-out of CAPEX and networks, like I said, I think there are two parts to it. One is coverage CAPEX, which would be pretty much done. I think there will be some places where there could be some sub-gigahertz spectrum that will drive coverage. And, as cities get more dense, what you'll need is a little more capacity coverage, capacity sites rather, which will be in certain key hotspots. There are multiple technologies for this, whether it's the fourth sector edition, maybe a separate site, or technologies like massive MIMOs, which will be the other place where investment will need to be made. And the third part of the investment is really on getting the backhaul networks right, fiber transmission, and the core networks.
Okay. Thanks a lot.
Thank you very much, Mr. Kulkarni. The next question comes from Mr. Sanjay Chawla from JM Financial Mumbai. Mr. Chawla, you may ask your question now.
Hi, good afternoon. Thank you for the opportunity. I've got two questions. First one is on the mobile business. You mentioned that, feature phone will remain a limited segment, but obviously there is, competitive action going on there. So how are you looking at defending the top end of your feature phone base? Do you think ARPU will do the trick in terms of, a compelling price point? Or do you think handset partnerships are possible, for bringing out a cheaper 4G version, and you'd be okay with giving some subsidy to go with that? That is the first question on mobile.
So I think we're watching the space carefully. We are extremely averse to the prospect of providing subsidies at the feature phone side, subsidizing really low-end customers who don't have the potential to actually upgrade is not, an idea that makes great business sense for us at the stage that we're in. Having said that, our focus is to actually identify those customers who are at a higher ARPU and try and find ways and means to ring-fence them. There's a real great emphasis and focus on driving our bundles, even on the feature phone side, in order to knit those customers to our networks, which is one of the reasons why we see a secular decline in the churn levels over the last few quarters.
So you would be looking at feature phone bundles and not necessarily a 4G VoLTE kind of a bundle to counter and to defend your base?
I think feature phones, you don't need to bundle. The feature phones already exist. I'm talking about more bundles in terms of pricing on the feature phone side in order to ring-fence those customers. Whether they buy a new feature phone or get it on an existing feature phone really is not of great consequence.
A related question is, we haven't seen much action. Obviously, probably the top end of the feature phone is also going to upgrade to smartphones, is upgrading to smartphones. But we haven't seen much action on the low-cost Android Go platform smartphones, below 2,500 rupees and offering a good, acceptable quality so far. Do you think, it's really possible to, have such kind of cheaper smartphones coming into the market, or you think it's more of a hope rather than, what can be actually real?
I think there are two conflicting pressures here. One is that when you look at devices in the price range of between 3,000 and 4,000 rupees, what you find is that the contribution of these devices is actually very, very small. And this is very atypical and, not the case in most categories across the country. So if you look at most categories, at the lower end, you'll see a lot more volume. In India, actually, the volume on smartphones begins around 5,000 rupees, which means that, because people spend 4 hours on the device, there's a huge element of aspiration where people want to buy a better device, a good brand. And so while I do think that Android Go will be a big driver to bring the prices of devices further down below the 3,000 mark, I think time will tell whether that will be attractive enough for somebody, upgrading to a feature phone. Will they actually go for that, or will they invest another 1,000 rupees and go for a better phone? So I think that has to be tested and seen how it works. But we think that this could be a big driver to actually upgrade feature phones, with the caveat of aspiration that I mentioned.
Okay. Second question is on the fixed broadband strategy. When you're saying that you're looking to upgrade some of your existing customers and home passes from ADSL to fiber to the home, are you actually doing fiber to the home? Are you doing underground, or is it more of fiber to the building and overhead kind of a structure?
A large part of our fiber is underground. We are doing, right up to the last mile, we go underground, and then we use the building ducts to actually go into the homes. So I would say a large part of it is really underground.
But will the access network is underground, close to the building and inside the building?
Yes, please. Yes.
Okay, but so does it make does it mean a viable business, because ARPUs are constantly under pressure and they keep coming down, especially now Jio is talking about a launch there. So underground tends to be expensive. So do you think it's a viable business? Because even in ADSL, I know the capex is still very high, although it came down in later years. At sub 1,000 rupee ARPU, is this a viable business?
Sanjay, if you look at our home business segment, first of all, there are 2 points I would like to make. Is our focus generally is high rises, where the cost of rollout and capex is substantially lower than a flatbed, and we only go for marquee flatbeds. Secondly, if you look at our home broadband business financials, we have always maintained around 40 to 45% of EBITDA margin. If you look at the last 8, 10, 12 quarters or so, despite the pricing pressures, we have been able to hold and maintain it. And long term, we feel that there could be small short-term pressures out here, but overall, in the long run, this is an extremely profitable segment and a stable segment for us to be in.
Okay. Maybe if I can squeeze in one small question on the mobile business. You have a pretty substantial chunk of your customers, having smartphones, but not all of them are your MBB or mobile broadband data user. So because they're using rival telcos' data, what have we done so far to pull them back? Is it really possible to pull them back, or is that a lost cause?
I think it's a daily effort. I think it's a function of the networks and the network experience. It's also a function of pricing. So if there are some customers in India who are looking for the best deal, and given that we are at a premium, some of these customers may be difficult to attract back. But we do keep bringing customers back onto the fold on the quality of our network experience.
So do you think once you have enough capacity and coverage available on 4G, and we're probably getting there, you would use pricing mechanism to pull some of them back?
We don't want to further destroy pricing in the market. I think like I mentioned, I think what we would like to do as players in the market is actually to see pricing lift. So beyond a point, I think bringing pricing down is going to hurt the whole industry. Industry revenues, as you're aware, have fallen from close to 200,000 crores to 120,000 crores.
Okay. Thank you so much.
Thank you very much, Mr. Chawla. The next question comes from Mr. Viral Shah from Credit Suisse, Mumbai. Mr. Shah, you may ask your question now.
Hi, good afternoon. This is Sunil Tirumalai. Thank you for the opportunity. My first question is on how the Telenor acquisition played out on the network side. I was surprised to see that the number of network sites additions was fairly low. And I'm sure Telenor at the time of announcement would have had 30,000 odd sites, and none of them seem to have come in. How did it actually play out? Did they shut down their sites before the conclusion of the merger, and you had already moved the Telenor subscriber traffic onto your network, and then pretty much nothing was left for you to integrate later on? And is that how the Tata could play out?
So I think this was a merger that, like I mentioned early on, was very well planned. We took almost 6 to 9 months. We knew exactly which site we needed, which site we did not need. Many of these sites that Telenor had were co-located sites, so we didn't need the Telenor site. And I think the moment the D-Day of the merger approval took place, our teams went into full force in terms of working. The first 30 days, we actually shut off 3 circles, and then the next 30 days, we shut off another couple of circles, and we're now left with just 1 circle, which will be shut down very soon. So I think it was just a function of very good planning and clarity in terms of where we needed it and where we did not, because there's no point to have a duplicate network or a network running where we did not need the sites.
Right. So basically, in about a couple of months, you could, rationalize these overlaps.
Yes.
Okay. Thank you. My second question, is on, Gopal, your comment that, hopefully in a 3-player market, with equal shares, we can hope for improvement and returns for the industry. Do you think an equal share amongst the 3 of you is the point we have to wait for till, the ARPU increases happen? Because till the time the market shares are shifting, I'm not sure, I'm not sure if the ARPUs can sustainably go up. And related to that, do you think, let's say a 30-30-30 or 33-33-33 market share split, is that a stable equilibrium? Thank you.
Well, I was saying that in the long term, I think this is now, if you look at the positive side of this, Sunil, I think it is a large market in India, 1.3 billion customers, 3 large players serving these customers, of course, plus BSNL, is actually a good industry structure. I think we're reaching a point where all the players are getting larger by the day, and therefore there is a strong, possibility that at the lower levels of pricing, which are clearly sustainable in terms of return of capital and all the investments that have gone into the industry, also the fact that there's just an incredible amount of allowances that are being given to customers, I think some of this has to correct. So that's really the context in which I made the statement.
Okay, thank you.
Thank you very much, Mr. Tirumalai. The next question comes from Mr. Viju George from JP Morgan, Mumbai. Mr. George, you may ask your question now.
Yeah, thank you for the opportunity. I just want to understand the implications of the Idea Vodafone merger for your costs. Presumably, I think they had guided for rationalization of sites of up to 70,000. In many of those towers, I presume your co-locations also be present, which means your rents might increase, your energy costs might increase. Is that something material you think that will play out the next couple of quarters as 70,000 sites get shut down?
Viju Badal here. We are assessing, we'll get more clarity as and when they announce which sites they want to exit and what the implication to us is there or not. But we don't expect that to be material enough in our assessment with whatever we have done.
Sure, thanks. The other question I had was on the 4G feature phone side. I think Gopal did mention that many of the customers that are going there are essentially feature phone subscribers and not smartphone, not downgrading from smartphones. But I think RJ has also indicated that a very substantial percentage of their feature phone subscribers are those who have gone for the smartphone-like plan of 153 rupees. So in that context, I'm just trying to understand what has been the real attraction, just the fact that they don't have to pay for a device up front, because affordability-wise, they seem to be already up there as far as smartphone is concerned.
Viju, it's very difficult to comment on what's playing out at the other end. But when we look at our data and we are looking at our analysis, we are seeing more feature phone as the people who are kind of going towards the 4G feature phone.
Sure. Thank you.
Thank you very much, Mr. George. The last question comes from Mr. Vinay Jaising from Enam Asset Management, Mumbai. Mr. Jaising, you may ask your question now.
Thank you so much. Firstly, congratulations on a good set of numbers considering the tough environment. I have 2 questions here. First, on Africa, the business has done very, very well. Margins have moved up, and you're looking at some kind of divestment on that. Any updates on, what are your thought processes of where the margins can go to and, how you're seeing the business out there? That's my first question. Second, Gopal has spent so much of time on, a possible 6-month forward improvement in the overall ARPUs or the overall revenues for the wireless business. My question is here, does it first downtrade more because we've seen some amount of postpaid pain coming in from competition from Jio? And, in case, they don't reach their subscriber base of what they want to, do we still think, that, we'll see some positive light in terms of tariffs moving up, or do they have to do nothing? And just because of the amount of volume growth which has happened on data, we will either way see the revenues of the sector and Bharti's wireless mobility move up significantly. Thank you.
Nilanjan here, before Raghu answers, I'm glad you asked that question because Raghu's been asking me why the hell am I coming to the earnings call. This is actually a landmark quarter because it's the first time in the history of Africa's acquisition that has been PAT positive, including the acquisition interest. So I think Raghu was waiting to get that question. So Raghu, on to you.
Okay.
I thought so as well. Thanks.
Yeah. Then the key thing is, over the last 2 years, we've had first a structural correction on our cost, and then we started inching up our revenues. This year on constant currency, this quarter, we are well into mid-teens on revenue growth. Costs have been more or less kept stable with a small increase due to network expansion. But overall, if you see, we still think there is a marginal scope, and we will continue to hopefully grow these revenues while trying to keep costs low.
As far as anything on the margin front?
Yeah, we need to see it. We are continuously, that's exactly what management does, try to grow revenues and try to keep costs low. Hopefully we should see something. That's exactly our endeavor.
Sure. Vinay, on the postpaid downtrading specific question, we haven't seen much impact so far, but there could be some potential downtrading which we could see in a couple of quarters or so. But by and large, on an overall basis, we feel that in a couple of quarters it should be fairly stable as far as overall ARPU for the industry is concerned.
Okay. Thank you so much, sir.
Thank you very much, Mr. Jaisingh. At this moment, I would like to hand over the call proceedings back to Mr. Nilanjan Roy for the final remarks.
Thank you, everyone, and look forward to seeing you in the next quarter in various analyst conferences. Thanks again.